Jade Lizard example. Now suppose stock WMT is trading at $90 in July. You as a trader has a bullish or neutral stance on WMT. So you initiate a Jade Lizard position by selling an August 80 put for $72 and selling a 95 and 96 call spread for $31. Therefore, 96 acts as a stop loss. But on the lower side, you don't have a stop loss. Why? Because basically you are bullish or neutral. Now understand this trade, it's really simple. You are earning premium on the August 80 put and 95 call. And you are paying premium on the 96 call. So basically how it acts? It acts that if it stays neutral, that is, if it stays between 80 and 95, then you get to keep all the premium. And if it goes beyond 96, then you get to make a loss of $1, that is between 95 and 96. This is really simple because you are initiating this trade because you are bullish or neutral on WMT. And through Jade Lizard, you earn a net credit of $103. Now this income is really important because it will act as a benchmark to waive off losses. If the price of WMT ends at 94 on expiration, now 94 is near your 95 call. But as it is below 95, then both the out of the money put and out of the money call spread expire worthless. And as they expire worthless, you get to keep the $103 as your maximum profit. It's because they expire worthless. Therefore, the net credit is your max profit and the trade ends as you thought it would. In another scenario, WMT falls to $78. Now this $78 is below August 80 put. And due to this, August 80 put would be in the money with $200 value. Whereas other out of the money call expire worthless. So our problem is August 80 put, as other expire worthless, but this doesn't. Therefore, this $200 becomes our loss, and by subtracting the initial 103 profit, we get $97 as loss. Now the thing to note is we were neutral or bullish, but the stock went down. So as we don't have a stop loss trade on the lower level, we get to keep a loss. So Jade Lizard strategy is only placed if you are bullish or neutral on the stock. Now how can you be bullish? You can be bullish due to the fact, let's presume it's an oil company. So if oil price rise, you are bullish. Example, you hear very good results, awesome results. So you can initiate Jade Lizard trade because you're sure that the market will either go up or will stay neutral. And if you are not sure, then don't trade it, because if it falls down, then you get to keep a max loss, as we discussed now. Now in another scenario, WMT ends at $100 on expiry. Now if you remember, our calls were at $95 and $96, so it's far higher. However, due to our call spread, we end up with $100 as our loss, because after 100 profit after $100 profit deduction, we end up flat due to commissions. So that 96 call that we traded on that acted as our stop loss waived off all the losses if the price went above it. So it made our trade as no profit no loss trade, because even after deduction of $103 initial profit, we end up with $3 profit, and that could be used to pay off commissions. So we ended flat if the price went beyond 97, beyond 96. But if it stayed between 80 and 95, we would have made our max profit of $103. That's what Jade Lizard Trade is. Thank you.